Hey, everybody, we are going to look into the future today. I'm joined by Tyler Crowe. We're going to take a look at what's happened in the stock market so far in 2024, what we've been surprised about, and what we see happening in the second half of the year. And we really don't agree on a lot of this stuff. So stay tuned. Before we dive into it, check out fool.com/Frankel, the link you see on your screen. Get the top 10 stocks to buy right now from the Motley Fool, our sponsor. It's the best way to support this work we're doing here on YouTube. Again, that is fool.com/Frankel. So, Tyler, you're joining me. I don't see any magic 8 ball on your shelf or crystal ball or anything that's going to tell you what the stock market's going to do. I don't have one either. So, if we're being totally honest, let's say this right up front, we're probably going to be wrong. We're making our educated guesses.
We didn't do a great job at the beginning of the year when we did this either. So, hey, look, 6 months in, let's try again, see if we can do any better.
No, but I mean, and that's kind of the point. Even the top Wall Street analysts are generally going to be wrong. One of my favorite analysts said that small caps were going to be the big success story of 2024. It's kind of been the opposite. Even the Federal Reserve gets things wrong. Virtually no member of the Fed was expecting to raise rates at the beginning of 2022. What happened? They raised rates, they skyrocketed. So no matter how much of an expert someone is kind of my point. No one knows for sure what's going to happen. There are so many moving parts that dictate stock market performance, interest rates, whatever. So none of this is certain. We're using the best information we have now and in order to kind of help predict the future. So I want to start with that small cap thing because that was, I think, both of our prediction at the beginning of the year was that small caps were going to catch up to the rest of the S&P 500 for the past, I don't know, X number of years. I think it's like 14 years. Tech stocks have outperformed the rest of the market. It's resulted in a few mega cap companies, which we know as the Magnificent Seven. And it's beyond that even. There's, tech companies have just generally outperformed the big tech businesses. You have, Apple, Amazon, Alphabet. There are several stocks trading for trillion-dollar valuations that would have seemed ridiculous a decade ago. I think a decade ago, ExxonMobil was still the number one stock in the market. People were saying that was going to be the first trillion-dollar company. No one ever thought this was going to happen. So the big companies have outperformed.
It's funny you mention that. I can remember, 10, 11 years ago, you would hear a lot of conversations like this on, I don't know, I guess early podcasts, stock talk radio and stuff like that. And the concept of a $1 trillion company felt absurd. So yeah, it's funny that like from 10 years ago, the concept of a $1 trillion company being the most like absurd idea possible to now we have 10 of them and some of them are pushing over $3 trillion is kind of wild if you think about it. It gets to the point where we could actually today have that conversation. Well, what will be the first $10 trillion company? It would sound just as absurd, but probably 10 years from now, there's a chance there's a $10 trillion company out there. We just don't know which one it is yet.
Well, this is about predictions. Which one's it going to be? I don't know either. If I had to guess, I would say Amazon. But I could go all different ways. So let's talk about the small cap thing. So small caps are not doing that well this year. Small caps have underperformed large cap stocks, like I mentioned, for I think it's about 14 years, right after the financial crisis, is when the tech market really started to outperform. And at the beginning of this year, we predicted that small caps were about to have their moment. Again, a lot has changed in the past 6 months. I think at the beginning of the year, the market was expecting, what was it, 5 or 6 rate cuts when we initially made those predictions, and you were making just the same smirk you're making right now when I said that then, that it wasn't going to happen. And it turns out you were right on the rate cut issue so far. But one thing that didn't happen is small caps underperformed the market. And after, it looked good initially, but then they kind of took a different turn, and all the money's been flowing into the big tech stocks. The AI boom has a lot to do with it. So what do you see in the second half of the year?
Well, and this is where it gets a little challenging because it for me it's really hard to paint with broad brushstrokes on like mega cap versus small cap and things like that. I think when we originally did this, I thought there was a lot of opportunities in small caps, not necessarily kind of like, like go out and buy a small cap ETF, right? It's like there is probably a lot of really good individual companies that if you want to go digging, you can find them. And I'm sure, and I think there's a couple in my portfolio that have done better than the market, so we can at least do that. But yeah, I hear there's still the continued drumbeat on rate cuts and things like that as being some sort of salve for the market or salve for certain businesses. It's like, oh well, when the rate cuts come, everything's going to be handy dandy. But I still go back to the idea of if we're going to see rate cuts sooner than later, we have like two this year or a few in the coming years, it's probably going to be a sign of economic weakness. And if you have signs of economic weakness, I feel like those would dominate over any news of rate cuts because rate cuts are used to kind of stimulate things to make it better, right? That's why you could argue that they haven't done anything now because it's saving some financial firepower for when you really do need to use it. And so to me, there's this point. It's like, well, if we're going to see all these rate cuts that people are hoping are going to happen, and the market seems to want to price into small caps or real estate or a lot of the things that you and I talk about, it kind of gets at the idea that like, if these things happen pretty quick, it probably means we've seen a deterioration in the economy. They're keeping rates high because the economy is doing relatively good. GDP is still growing at a good rate. Unemployment is still below 4% last time I checked. So really good on historical standards. And with all of these things in mind, yes, those are going to be structurally a little bit inflationary. You throw in a bunch of other things with globally going on that I could list for 15 different things, but that's with macro, right? You could throw out 15 things and say it's good, or 15 things and say it's bad. But to be honest, my biggest prediction is I'm just going to keep on digging for individual companies, man. Like that's where you're going to find the alpha or find the market beating returns that we're looking for when we pick individual stocks. And if you as the investor want to make better than market returns, that's what you got to do too. So like, yeah, that's really lame and corny, but guess what? It's predictions. At least I know that one's going to be right.
So I think that small caps are going to outperform in the second half of the year. I think we're going to get two rate cuts. That's not the primary reason I think small caps are going to outperform. I will say if we do get those two rate cuts, and you might agree with me on this one, I think real estate will outperform. Not necessarily all small caps, but I think real estate, which is more directly tied to costs of financing than they are, the economy in general, especially in terms of the larger REITs in the market. So I would say real estate will outperform if we get rate cuts. But the biggest reason I think that small caps are going to outperform in the second half, it's not necessarily that I think they're going to do that great. It's because I think that the Magnificent Seven, which represents 30 to 35% of the S&P right now, I believe, I think that's kind of been overdone, and I think that the S&P is going to underperform small caps this year. Not that the small caps are going to do great, that the large caps aren't going to do that great. So my kind of bold prediction for this video is that all seven of the Magnificent Seven stocks are going to end the year lower than they are right now. Um, that's just kind of how I feel. I think there are a few that look attractive. We mentioned Alphabet or Google in a recent video. I own Amazon as well. But I think that the large caps are going to do poorly more so than I think the small caps are going to do great.
I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment, so I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 4 times. So go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 650% as of April 16th, 2024, and are measured against the S&P 500 returns of 148% as of April 16th, 2024.